The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 22nd of June, 2018. Well, first one up is from CNBC, and this title is, "We're seeing the greatest asset inflation bubble in 20 years, fund manager warns." So the fund asset manager from Citrus Asset Management is Ralph Jaynes. He said on Monday, joining a long list, by the way, of financial planners casting doubt on the strength of the market's current bull run, nobody wants to talk about it being a bubble, using the B word. It's the greatest asset inflation bubble we've seen in 20 years, Jaynes told during an appearance on CNBC's Squawk Box Europe. There is wide disagreement over whether the markets have further declined or whether we'll see a spectacular market correction. Investing titan Mark Mobus recently predicted an impending correction of up to 30%, while others see no cause for concern. But assets like tech equities have hit their highest points ever this year. Because of this, Jaynes explained traditionally defensive stocks like healthcare, pharmaceuticals, and telecommunications are losing out. And they are exactly where you'd want to put your money in the event of a downturn. So I think it's important to know that there's sort of this bifurcation of some of the money managers saying that this is about it, and there's going to be a rather significant correction. And there are others, obviously, that are still cheerleading the bull market in the equities and don't see any cause for concern. Personally, as I've said many times, by any real metric, these stocks are overvalued. The only reason I see them go significantly higher, like double from where they are now, is if we got into such an inflationary environment that people will be using the stock market to protect their purchasing power. And this has happened in the past during hyperinflations. I don't really see that coming. I think what's ahead of us is a currency war, which we're already witnessing with these trade wars, which are kind of contributing to the currency war. And there'll be very, very opposite things happening. In other words, like a stagflation. You see some asset classes appreciating in dollar terms and others coming down. Just about anything that is debt-based that can be used from a financial perspective as a loan or debt instrument, meaning like a car loan, or of course the bond market in total, or the corporate bond market, or a mortgage or anything like that, probably will see a lot of losses because of the leverage being deleveraged and having to mark to market. And other assets that are fully paid for that have real value will probably appreciate. So that is my take where we stand currently. The next headline up is from The Guardian, and the headline reads, "Global debt has hit a high. Can financial regulators cope?" At the end of May, the IMF, the International Monetary Fund, launched its Global Debt Database. For the first time, IMF statisticians have compiled a comprehensive set of calculations of public and private debt, country by country, constructing a time series stretching back to the end of the Second World War. It is an impressive piece of work. The headline figure is striking. Global debt has hit a new high of 225% of world GDP, exceeding the previous record of 213 in 2009. So, as the IMF points out, there has been no deleveraging at the global level since the 2007-2008 financial crisis. In some countries, the composition of debt changed as public debt replaced private debt in the post-crisis recession, but that shift has mostly stopped. Are these figures alarming? In aggregate terms, perhaps not. At a time when economic growth is robust almost everywhere, I doubt that statement, but I'll continue. Financial markets are relaxed about debt sustainability. Well, when you're at 225% greater than what you're producing, I think it's cause for concern. You can read the whole article, and it's slanted a bit to the mainstream. Last couple of paragraphs. We must hope, therefore, well, it talks about, first of all, jump up a second here. The U.S. position is less clear, talking about other countries and how they're positioned to cope with this debt. It is a bowl in which the alphabet soup of U.S. financial regulators is stirred from time to time. It has no authority over its members and cannot impose countercyclical buffers. It attempts to categorize large U.S. insurers as globally systemic firms that have been thwarted by the courts. There are those of the U.S. Federal Reserve who wish it were otherwise, recognizing that without support, which is chaired by the Treasury Secretary, they will find it hard, if not impossible, to dig into their micro-prudential toolkit. We hope, therefore, that the Basel-based capital requirements imposed by the various U.S. banking regulators are adequate. So far, the ratios have not been cut, though other deregulatory initiatives proposed by Trump appointees in the relevant agencies are in the works. Macroprudential policy must be working as intended in Slovakia, but it is unlikely to come to the rescue when it's needed most in the world's biggest financial markets. In other words, the regulators have got set limits, and these limits are intact, and basically use some common sense. Whatever the limits are, they are not adequate, really, in my view, and history proves this out, to be adequate when the first domino hits the 2, and the 2 hit the 4, 4 hit the 8, and we have an exponential debt reduction due to the exponential nature of the debt bomb. And I go through that in the Silver Manifesto with the chapter titled that, The Debt Bomb. Next one up, Schmalz Gold. Russia adds another 19 tons of gold in May. Gold reserves now exceed U.S. Treasury holdings. This is a very interesting article. Russian central bank gold reserves rise to 1,928.4 tons in May. Russian gold reserves are the 5th largest in the world. Russia added 600,000 ounces of gold to its reserves in May. Russia added a record 224 tons of reserves in 2017. Overall, Russian reserves fell from 459.8 billion in April to 456.6 in May. Russian holdings of U.S. Treasuries were at 48.1, I imagine, billion in April 2018, and gold reserves worth 80.5 billion constituted 17.6% of overall Russian reserves. That's extremely high reserve base in gold, and most countries don't have anything close to that. In fact, you look at Canada, and basically they have zero gold. The value of the central bank of Russia's gold reserves exceed the value of all their U.S. Treasury holdings for the first time. The U.S. Treasury Department revealed that Russia's holdings of U.S. Treasuries fell from 96.1 billion in March to 48.7 billion in April 2018. According to the Central Bank of Russia, their gold reserves were worth 81.1 billion in April 2018, up from 80.5 billion in March 2018. Today, the Central Bank of Russia revealed that their gold reserves increased by another 600,000 ounces, and on it goes. We know that Russia and China, India as well, have been increasing their gold reserves for quite some time. This is noted by most in my field over and over again, but it's unceasing. And at some point, you will possibly see a bit of a squeeze on the gold market, which means because you cannot send a piece of paper to stack into a vault, it has to be physical, and this is what is taking place in these 3 countries, that it is putting pressure on the gold market, even though I know the price is down and no one's paying attention to gold and on what we hear in the mainstream. Nonetheless, it just keeps taking place, and over some period of time, it will amount to something. So it could happen. I won't say soon. I will just say that the repression in the gold market and the lack of attention in the gold market is certainly the time to acquire more, and obviously Russia's taking advantage of that. And I'll just finish up with this. I've been at the Pill Expo here in Spokane the last couple of days, and I'll be there again tomorrow for the final day. And it's been a very good presentation of events so far. The Lavoie Dead Man Talking video was exceptional. It's a real heart-toucher. Lavoie Finicum and his story, we saw part 1. There's 2 other parts to come. I actually spoke to his wife briefly, and I'll just leave it at that. You can look it up on the internet. Lots of great speakers, of course. G. Edward Griffin, Ed and I have known each other for quite some time, and he was quite friendly with the late, great Harry Brown, one of my mentors. I commend you, Ed, for continuing at 86 to have the vitality that you have and be willing to, as it was stated at the beginning of the conference, not sit in a rose garden sipping tea and enjoying your retirement, which most of your age would certainly be doing if they even make it to that age. But you're out there pumped up, your words, and very happy to be fighting the great fight to restore the concept of freedom and what it takes to everyone, not just U.S.-based, but on a global basis. Matt Shea, I know Matt fairly well. He is. I've been at meetings where he's been in attendance. He's always a strong speaker and a true conservative and heartfelt man. Del Bigtree, unbelievable presentation. He's the producer of VAX, which I've seen here in Spokane, and I just can't say enough about this man's research and what he has done to bring the truth about the vaccination problem. That is a factual situation, and it's very, very sad. Anyone that's looked into it with an objective, open mind will realize that these vaccines are not for the benefit of all. My friend Patrick Wood here. Pat used to live in Coeur d'Alene. I've known him for years. He's been emceeing on and off. Russell Gray, for the real estate guys, he and I connected again. I'm probably going to interview Russell. He has a very interesting concept on how to use your equity in real estate in a rather prudent way to actually move into the precious metals and kind of take, I'll call it a double dip. So I'm going to leave it there. I could go on and on. I'm very happy that I attended, and I would certainly recommend anyone that is looking for some answers and wanting to know more and more about what's really going on and what you can do about it and what the solutions are, and meeting with like-minded people of all stripes. I mean, Cynthia McKinney, certainly an outstanding human being. Her presentation, among many others, was just a home run. So I'll leave it at that. I'll be back with you next week, and remember, there is nothing more powerful than the truth.